Hey there, this is Pete Townsend from Continental Ventures, and welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at what makes them do what they do. This episode of Money Never Sleeps is kindly sponsored by Ireland's fintech and financial services recruitment specialists, Top Tier Recruitment. If you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with the team at Top Tier Recruitment. You can find them at toptierrecruitment.com and tell them we sent you. This week, we talked to Finn Murphy from Frontline Ventures, a Dublin-based B2B SaaS venture firm investing in Europe and the US. In a country of 5 million people like Ireland, the venture capital community is about the size you would expect, relatively modest. However, with multinational finance, pharmaceutical, medtech, and broader tech companies all progressively choosing Ireland for the European operations going back to the 1980s, and a well-educated workforce to boot, there's a much larger talent base in Ireland that you would expect for a country of 5 million people. So what happens when the risk takers with a few years under their belts and these multinationals get that entrepreneurial itch? Well, although there are definitely other factors, I've always pointed to these quasi spin-outs from multinationals that are sometimes no more than one woman or one man saying, I found a problem worth solving, and I think there's a big enough market for it, so I'll give it a shot. Ireland definitely has a larger startup ecosystem than you'd expect for a country of 5 million people. Like any startup ecosystem, it needs seed funding. So in a roundabout way, that brings us back to Finn Murphy from Frontline Ventures. He's been quite transparent about what he looks for in pre-seed stage companies, specifically in his specialty of B2B SaaS, which is business-to-business software as a service. Specifically, with one of his blogs in 2019, we covered his framework for founders on what to expect from VCs investing at the pre-seed level in episode 68. So I thought it was a good idea to go a bit deeper with Finn on this week's episode of Money Never Sleeps.
Money never sleeps, pal.
Here we go again. Welcome to Money Never Sleeps. We're recording today from the home studio, and we're on with Finn Murphy, principal at Frontline Ventures here in Dublin, venture capital firm backing B2B SaaS companies with international ambitions, investing in seed stage European startups as well as growth stage US companies coming to Europe. In addition to their Dublin HQ, Frontline also have a presence in San Francisco and in London, and they've invested in the likes of Pointy, which was recently acquired by Google, Currency Fair, Finborn, and Clearbank, just to name a few that are going to be important to our listeners that actually have a fintech mindset. Finn recently had his 2-year anniversary with Frontline and is a board member or observer on Frontline investments such as Pathfinder, Umba, Cloudsmith, Modules, Swig, and Evervault, amongst others. Beyond venture investing, there's a lot more to Finn Murphy, but we'll get into that in a minute. So, after that long intro, finally, welcome to the show, Finn.
Great. Thanks so much for having me on, Pete. And strange to be on the show after a previous show covered a piece of content that I wrote.
I know. Like you said at the time, it was a bit meta. And our listeners will know that, we already did that show covering your blog post and the teardown of it, of what you think about the pre-seed investments. And, we did that because it was like reading some of my own thoughts aloud that we could talk about a little bit later on. And that one came together a bit at the last minute as my co-host, Owen Fitzgerald. He was supposed to join me for that episode. And we recorded that at Head Stuff, which is right across from your HQ there in town. But he couldn't make it at the last minute. So that was my first and hopefully only monologue episode. And our producer, Conan Brophy, he stuck in some like massage music in the background there, just to ease it for the listeners. But as it turns out, I just checked the stats on Chartable. It is the second most downloaded Money Never Sleeps episode out of the 80 plus we've done since 2018.
Oh, wow. I don't know. Maybe you should monologue more often, Pete.
I'm thinking about it. We'll see. But that one was a hard one to do. I think it took 20 minutes of recorded content that I narrowed down to like 10 minutes just because, lots of stops and starts in there. Anyway, let's dig right into your backstory, yeah? Tell us about that, your backstory, and how you got to this point of doing what you're doing today, yeah?
Yeah, sure thing. So I probably started, I went to university to study engineering, studied general engineering, like a little bit of computer, electronic, mechanical, civil, and then probably focused on mechanical. I just prefer it. Like, to be honest with you, I was not the biggest fan of computer engineering and coding. So I was like, okay, mechanical's the stuff I'm interested in. And it turns out, like, I kind of realized when I was in like kind of third year, sophomore year, that, most mechanical engineers end up being McKinsey consultants or
Yeah.
investment bankers. And I kind of was like, okay, maybe that'll be fun, and applied to like a BCG internship, I think like 3 times, and never got even to the first interview. So I was like, okay, maybe I do not have the certain writing style or skill set to actually go into one of those jobs. So I kind of ended up getting it. I was doing a bit of side work on the side. I was organizing events, like parties, kind of trying to make cash while you're in college. And I ended up doing some work for Web Summit, and some of it was volunteered, some of it was paid, but you just kind of ended up getting exposed to that sort of tech world, and like at the time venture world, but like in reality I didn't even know what venture was. I was just really like talking to CEOs, talking to people running companies, and I was like, oh wow, what you guys are doing seems pretty cool. And that sort of set me down a path of like, okay, well, like, if all these people can do it, why can't I? And tried a couple of different startup ideas in college. Eventually managed to get one of them funded by the university, and we kind of built that business as with the college we were attending as our first customer. Spun that out, raised a little bit of money, and ran that for about a year after we graduated, until we kind of came to the point of realizing that we had absolutely like no idea what we were doing, or like any idea. Well, me in particular had like no idea how to actually run a business. So that was an interesting kind of realization, where I think it's like that moment of sort of realization when you realize how little you actually know. You thought you knew so much, and then you realize how little you actually know about anything. And that was probably like one of the turning point in like kind of my entrepreneurship journey, where I was like, okay, maybe now is like, maybe I need a little bit more like experience or time under my belt before I'm like really ready to do something interesting here. And that kind of led me to, we ended up doing a deal with another fintech business called Plink to basically kind of acqui-hire me and my whole team. It was me and 5 friends from computer science in Trinity. And we then all joined Plink at the same time, around when they were raising their Series A. And that was great. Like that, we had a great time, but we kind of learned hard and fast. There's again so many things that like at the time seemed so sensible and so normal, and then like now, having been in venture for 2 years, I'm like, oh my god, I actually can't believe some of that shit happened, and that all ended up kind of going sideways, and met some really interesting people, and like made some like good friendships while we were working there. But, it came to the point where that business just went totally sideways, and I had to jump out. And that coincidentally timed perfectly with when Frontline were looking to hire a new member of the investment team. And they were actually, at the time, they were just hiring an analyst. And I was like, oh, like, fuck it, why not? I might as well throw in an application. And that was about 2 years ago, around 2 years ago today.
Wow. And the spin-off that you had out of the Trinity Digital ID, right? That was ideally, or idly, how do you say it?
Oh yeah, ideally. Again, like I think like another lesson again you learn is like, don't try to be clever with the name of your startup. Like we were like, it's like ideally. And then like literally every single person we spoke to ever was like, idly systems. And we were like, oh god.
Yeah. No. You got it right on the fact that you only use 4 letters, right? Which is a good one. But that, and I didn't know about the Plink side of things, because that's really interesting. I saw Plink on your LinkedIn profile, but didn't really make the connection there. I've met Charles a couple of times, and I kind of know what he's up to today, but we'll leave that for another conversation. So it was the analyst job that you went for. You got it, obviously. But how did the conversations go that built that bridge for you from, okay, what I would call in the U.S., where I'm from, a double major in math and engineering, to doing a bit with, being a startup founder, doing the deal to make that part of Plink, and then, then analyst in a venture firm. Tell me about that kind of bridge.
Yeah, like I really had I still am like question at times whether I have any idea what I actually want to do. And I'd applied for a ton of different jobs. There was when I was leaving Plink, there was an option to go like work as a like consultant for a ton of different interesting blockchain and cryptocurrency projects. I was like interviewing for a product manager role at HubSpot. I was talking to, funnily enough, Pointy about taking on kind of going in. Their head of growth was leaving, and they were looking to get someone to replace him. And I'd been doing growth at Plink, so I was kind of looking to step into that sort of role. And like all of those things were kind of in the pipe before I ended up getting the offer from Frontline. And I had a pretty hard time trying to decide which to do, because like I had no idea really anything about venture or like what the job would be. I'd had like some interactions with Frontline and some interactions with VCs while I was running my company, and then to a lesser extent when we were at Plink. But I just I didn't have enough knowledge to know that it was like, okay, what is this actually? Like, is it a career? Is it an interesting job? And then I called a bunch of different people, and all my founder friends were like like VC's a load of shit. Like, don't go to the dark side. You're gonna be, you're gonna lose your operator's edge, and you're just not going to be able to come back to startup land. And then I spoke to a couple of more kind of senior people who've been around the block, and one of them asked me, they were like, and at the time, this was what I was like, the only thing I kind of had in my head. They were like, what do you actually want to do in the future? Like, what do you want to do after this? I was like, I probably want to start my own company again. I don't know what that looks like, but like, I think I probably do want to try to build something at some point in the future. And one of my mentors, who's a general partner at another kind of one of the larger funds in the UK, said, look, when you're a founder, it's not like you watch the movie. It's like you're the producer, the set designer, the actors, like, you're the director, and you pull everything together. And you get that like really rich experience from like seeing how it's all put together. But at the same time, like, you only get to see one, you only get to do that on one movie. While he kind of said the thing with venture is, you might not get to be the director, you might not get to be the actor, you might not actually get to like really get involved in that many companies, but you get to see so many.
Yeah.
That breadth of experience will just like suit, like, if you do decide to start another company, not only helping you in operating that company, but also deciding what picking the right thing to work on. And that to me was kind of what clinched it in terms of taking the job in VC after that fairly, kind of meandering path along the way.
I get it. Well, I mean, with anybody, if you're good at something, there's a set of instincts in you that really kind of act as your grounding in business, in anything in life, right? So if that's there, and I kind of sense that in you a bit, and this is just from reading your blog posts and the limited interactions that we've had, Finn, that there is something there from a business mindedness perspective. I don't think you're going to lose your edge. So,
hopefully,
I get it. And no, and I do agree with, that concept of the more you see and the more reps you get with looking at different companies, the more you're able to then present what you think you're going to do next or now, really, in a better light, right? And more concisely, in a more compelling way. So yeah, there's a big benefit to doing this.
No, absolutely. And I think that's the thing about VC, and like, it's kind of annoying for anyone who's thinking of like getting into VC, is like, there's like the only two types of people I've ever seen get into it are people who are like absolutely like dedicated to becoming VCs, and they pour their heart and soul, and they make it a part of their lives. Or there's people who are so close to startup world, or like so close to being a founder, that I don't want to say fall into it, because like there's still steps involved in getting there. But like, it's like, in order to end up in this position, I happen to be in a place that I didn't realize was so tangentially close to what I'm doing now, but it enabled me to kind of like slide into this other role without really having to go through that much of a long rigmarole of applying to a lot of different funds, or like trying to figure out, even if I wanted, I didn't have to decide even if I wanted to do the job until after I got the offer, which is it's a pretty nice position to be in.
Yeah, absolutely. Yeah, no, I get that. And with me, like we were talking about before we went on air, I mean, it's been a journey for me, but it's been more of a side path that this is going to happen eventually, and I'm nearly there into venture, and have made a lot of steps in that direction.
Mm.
But I feel like it's more of going to be an outcome of the process that I'm doing anyway, right? Which is like you're saying, being that close to startups and being that close to almost being a founder or being a founder for
Mm.
that matter. I get that. I get that. Tell me about your approach with Frontline, right? Both in terms of how the firm is investing in
Mm.
startups, but also how that's become part of your modus operandi or your modus operandi to begin with, right? Your place in the middle of that all.
Yeah, like I suppose Frontline was founded about 7 years ago to bring a more US style of venture to Europe. And I think that was the experience of the GPs at previous funds they'd worked in Europe was that, it was still like 7 years ago, European venture was just like completely different gravy to what it is today. Like it was still like, I think we still lag the US in some ways, but like we lag them by like 12 months instead of by like, 4 years.
Yeah.
Uh, and I think that's like the style Frontline have generally tried to, we don't make any bones about it where, we're only interested in backing founders with really large ambitions, and it's why like kind of the US, the Frontline used to have this joke internally that like you just find any of the founders who'd gone and tried to raise money from US funds and write them a check because it like gave you a good benchmark on the scale of their ambition. So like
Right.
it's that's really where we started. It's like looking for people who have that like world beating. I might be here in Ireland, I might be here in Denmark, I might be here in the UK, but like I have just as much of a shot as anyone who's building one of these real like breakout companies.
Yeah.
And that's probably why we're a seed investor is like we're much closer as a fund in terms of our DNA when we're like, we feel much more comfortable when we're assessing people and we're assessing like high level markets than when we're like tearing apart financial models.
Yeah.
And I think that's there's an element of like perceptive kind of like, you don't want to you're not trying to pattern match, but like you're trying to like see the world today like really as clearly as you possibly can, and then look for people who have recognized something that everyone else has missed, and then back them to go and chase that opportunity. So, for us, like, that's investing anywhere from like 250K into a pre-product, like, one man shop to two person, to sorry, like 20-person company doing $1 million in annual revenue, writing like a
Yeah.
3 million euro check. So like that's kind of the range in which we operate. But we've always taken this like, people-centric approach. Like for us, it's like, even like people always ask me this question about valuation. So it's like, how should I value my business? So I'm like, well, how much money do you need to be successful? Like at this, what is success? And it's like, if success is getting to cash flow break even, then, your business probably isn't for us. If it's getting to strong growth metrics or a strong product, product proposition that enables you to raise another round of financing at a markup, at a pretty significant, kind of like a 2 to 3x markup, and it's like, okay, how much capital is required for you to do that? And whatever that is, like that's what drives the valuation. It's going to be, well, we don't really want to own more than 25% of a business. Like it's not in our, it's just not in our interest to do so. And we want to make sure that management teams are properly incentivized, and that, if these businesses are successful in the future, that they don't require like big management re-ups because they've been, down, like absolutely like diluted down to nothing. Because in the end, that just hurts you on the far side. That just hurts you on the far side as an early stage investor as well.
Yep. Yep. No, I get that. Being very realistic about things. We had Ivilo Jordanoff on from 7% Ventures back about 7-8 episodes ago, and he was talking about his benchmark of $1 billion, right? And saying, can this be $1 billion company? And using your framework that we looked at, you can kind of walk back into, going 5 years back, right? To get to today, you can kind of start to get your head around what that might look like in terms of the market size as well. But just talking about your blog post, you did one more recently in February where you were talking about the next decade of Irish startups will look nothing like the last. Do you think that COVID-19 has been a bump in the road or potentially an accelerator to some of this? What are some of the observations from the last 6 to 8 weeks or so in terms of all this?
Yeah, I think COVID will, it's very tough to know. I think COVID will pass. It's the long-term economic damage that's the thing that's really there will be less moderately successful companies. Like guaranteed, I think there'll be a lot less moderately successful companies, but I think there will be the same number of breakout companies as there would have been before. And I think that was it's like I made this joke I was talking to another venture capitalist, and there's only been $1 billion software. It's not even an outcome yet. There's only been $1 billion valuation in software in Ireland in the last 8 years, in the last 8-9 years, and that's Intercom. That's not good enough to be as an investor. If you're just investing in Ireland, that means you have to be getting that old school style ownership. You need to be owning 25-30% of these companies if they're not exiting for big, if the outcomes aren't sufficiently large. So I think my view was, it's really hard to be what you can't see. And I think progressively as the world's become more globalized and this secrets of Sand Hill, secrets of Silicon Valley, stuff kind of starts to permeate more beyond the Bay Area. And, even the talent that is required to build these companies also permeates out, whether that's, DocuSign having their security team based in Dublin, whether it's Zendesk having their mobile engineering team, whether it's, HubSpot having their growth product team, all of those things, even Zalando have their data science, their whole data science org is down opposite Google in Grand Canal Dock. It's a really simple prediction to get right because obviously they're going to be different. There's just technology has moved on, business models have moved on. But I think the difference that I see is all of the ingredients are there to produce 5 intercoms. And it's partly, the only thing rate limiting that is those companies' access to capital, which I think is a problem that's been solved by opening up of international, Kleiner, Greylock, Axel, Index, and Sequoia all did their first, early stage Irish investments in the last 12 months. That, you can take that as a once off, or you can take it as oh, they've looked here once and that means they're going to start looking here again. So I think the capital problem is solved. The the next problem is talent. Can these companies actually hire enough high quality people in Dublin, or do they end up having to shift operation? Do they, eventually get to a scale and they have to move to San Francisco, or they have to move to London, or they have to move to Berlin? And I think COVID, to a certain extent, provided the companies are well funded, which I think the breakout performers will be. I think it can be, there will be opportunities to hire really good people who are becoming available because their jobs are kind of either have been made redundant or, are not necessary, or companies they're working for shut down in other sector, in other parts of the kind of technology industry.
Yeah, I get that. And, that next wave happening, it's continuing to develop here in Ireland, right? And, I always say that Ireland punches above its weight in a number of areas compared to its population, especially in the financial services sector where I'm from. But so much of that financial services sector that is international financial services, they really don't know what's going on at the early stage scene here. They just don't see it because it's not that prevalent and it's not that readily available to see right in front of them. But it's like any small country. We are 5 million people, right? This startup ecosystem that we have here is a small part of the overall economy, a small part of the overall working world. And I think it's just, it's going to take time for that to develop even more. Now that all the pieces are here, it's just going to take some time to get there. Do you see anything in terms of how those companies, stay in Ireland and do grow as an Irish company versus growing as a US company or as a UK company?
Yeah, I think there's there's going to be no choice for a lot of these companies. Like you will have to open US sales offices. Like, you may have to open a UK sales office. I think it's more like, whether the beating heart, so to speak, of the company can stay in Ireland long enough, and you can bring in an exec layer that can help build the company out. Like I would say the only thing, the biggest rate limiting factor on scale up staying in Ireland is there are like a decent amount of people in Ireland who know how to operate and run a business that's going from say 1 to 10, going from $1 to $10 million in annual revenue. There are very, very few who know how to take a business from 10 to 100. And there are basically none who know how to take a business from 100 to a billion. And I think like that's where you end up running to the rate limiting factor of like actual talent and expertise in operators that know how to cover those areas. So like, it's eventually companies will come to, it's like having a VP market, having a great SaaS VP marketing. There's just almost none who have actually done it in Ireland, and you can take a chance on people, but like, even in terms of mentorship, there's no one in the local geography. Closest people are in London. Most of the people are in New York or San Francisco. And I think like this is why this generation of Irish startups, that's either a problem that continues ad infinitum, or you eventually get a generation that kind of take those chances and bring in those execs and like either train them here or move them to Ireland. But it's that is I think that's the hardest thing to overcome in terms of these companies eventually moving their center of gravity to the US. And the tax incentive, like it comes down to things like tax incentives, it comes down to things like housing, it comes down to things like schooling. Like is it easier for you to convince these incredible people to move their entire lives to a different country, or is it easier for you to move your company decision-making apparatus to the US? And often it's the latter.
Yeah. But I mean, the thing is, does, this new normal, and I don't know what that new normal is going to look like, right? But it's going to be different. Does that mean that more companies can stay put? Or is it still going to be, you need to have that physical in-your-face presence, especially in something like B2B SaaS, where, that there is still an element, obviously, of enterprise sales that's involved with all this. Do you think we're going to go back to that, or will any of these big new massive efforts for people to virtualize their sales process over the last couple of months? Yeah. Will that start to change things a bit?
Yeah, like I think, there's the thing is, if you talk to any remote, like fully remote business, like so many of them will say it's like, God, I wish we could get more FaceTime with decision makers on our team. And I think like, yeah, absolutely, this is going to make it more likely that people like look at remote models. But I think like when it comes to running like these massive businesses at scale, there's GitLab have shown you can do it. Zapier have shown you can do it. But I think a lot of companies will still want their exact decision-making teams to be in the same geography, or they will want them to have a co-located office. And I can see it becoming easier to do remote. It can be easier to spin up a remote sales team. It can be easier to spin up remote engineering. But I'm yet to be fully on board with the idea that the brain trust of a company can get by purely interacting over video conference. And yeah, that's from experience of like talking to companies that do that right now. And they say like, you can absolutely do it and it's fine. But then you get everyone in the room together, and you end up having what was like a month's worth of discussion over video conference in like 2 days.
True. Yeah, I know. One of the boards that I'm on, we do what feels like monthly check-ins with that's all video, but quarterly we're together, and though you do get so much more done when it's face to face, when you're actually in the same room. What do you think are some of the personality traits of yours that have made this work for you, and why you're still doing it after a couple of years? The traits that have been helpful to you?
Yeah. Gosh, personality traits for me. Uh, I'm probably like prone to imagining the future. So it's like I was playing chess with someone yesterday, and it's quite funny. I kind of like imagine what I would like to happen, like five, 6 moves ahead, and it's like, okay, when this happens, I'm going to do really well, and then completely botch the current move. And
Yeah.
weirdly, that is actually not a terrible thing in venture. Like, you kind of have to all of these companies, there's millions of reasons why they could fail, and if you don't have that kind of like optimism and imagination to think about, like, okay, well, like, what if it all goes right, like what could this be if if all the cards fall in their favor. And I think like that kind of like imagination and like the sort of positive imagination, even if occasionally it's to my detriment in the short term,
Yeah.
is useful in venture because it's generally a long-term game, and you can afford to make small mistakes in the short term, provided the bets that you get away and the vision that you can kind of share with these entrepreneurs can play off. I suppose I'm like, yeah, I like talking to people, and I'd say I'm probably fiercely coming from a family that's like fiercely competitive. Like you have to want to win. In a lot of these deals, like sometimes there's the entrepreneurs aren't talking to anyone else, and you get to just like spend a lot of time like imagining what the future looks like with them, like quizzing them on their goals, like quizzing them on their team, quizzing them on their plans, and you can get really comfortable and you can just decide to do a deal together, and there's no competitive nature of it at all. And other times you're like slogging it out with 10 of the other like smartest people you've ever come across, working for a bunch of different funds with different brands, different like portfolios, different areas of specialty. And like if you're not willing to get on like this was, I suppose it's a pain in the ass now, but like it used to be, like if you weren't willing to get on a plane and fly to some like random city in Europe on like 24 hours notice to go have coffee and beer with the founder to convince them that your money is better than someone else's money. Uh, like you have to like really want it to actually be up, to be up for doing that, because most of the time you lose and you're like, God, that was a complete fucking waste of time. And if you're
Yeah.
yeah, and you're like, oh well, I'll say probably I'll caveat that with like, you're like, oh, that was a waste of time. And then you're like, okay, well, actually, I know a ton more about that industry than I used to. I have a pretty good relationship with an entrepreneur who decided to go with someone else. But like, I still know that entrepreneur. And like, hopefully, if they're successful, maybe they'll have people who work for them who start companies in the future. And, they'll send them my way. But it's a job of, I'd say, like the personality trait of mine that like is least suited to this is the constant feeling that like 90% of your work output is not like non-productive.
Yeah, yeah, I know. I
Mm.
know. It's that repetition. It's just you gotta keep it coming in. You gotta keep looking at things. Fueling that, I kind of hear it from you a bit, and that fueling that optimism and fueling that imagination comes from talking to people all the time, right? You
Mm.
just got to keep doing it, right, to get these ideas.
Yeah, and you got to listen to like tons of nonsense to hear like a couple of good ideas. Like every founder has a good reason for starting their business, and like but not every business is well suited to venture. And sometimes the first time you have a call with someone is like the second time they've ever spoken to an investor, and you're just like, oh my god, this like I feel for you, but like you probably shouldn't have made your like second investor call a VC. And I think that it is that like you have to keep talking to people, because if you don't have any benchmark against which to measure the last person you spoke to. So like when you meet an amazing entrepreneur, you have to be able to recognize it, and you have to be able to recognize it like within 30 minutes, as the first 30 minutes of
Yeah.
speaking to them. And that's only possible with like tons and tons of effort, like experience and time, and just like really having this knowledge of like, okay, does this person remind me, do they have any of the same traits of any of the other great entrepreneurs who I've come across in the past?
I gotcha. I gotcha. That makes sense. Yeah. And, like we were saying earlier, being in the same room as somebody adds that little bit more oomph to your ability to read somebody. And when you see I don't know, not that you're getting that close to them, but where you see the hairs on their arms start to stand up when you say something specifically to them, or you can see their eyes move a bit. You can't always see that on camera. That makes a big difference. In terms of venture overall, with doing all of these things, talking to so many people, looking at so many decks, having so many conversations about investing and doing deals, sometimes you can kind of get lost in it a bit. But when you step back to kind of get a different perspective on things, who do you lean on?
Yeah, I suppose like I'm quite lucky in Frontline where we've a pretty, we've a good team of people with like varied backgrounds and experiences. But like, often it's like I'll even just talk to other kind of young VCs. I'll talk to friends of mine who are founders. And, it's like, I think the thing is like for anyone outside the like startup venture ecosystem, like, I remember sitting with a bunch of friends and I was talking about like the Uber IPO and the numbers, and they were just like, man, shut up. Like nobody cares about tech.
Yeah.
And like, it's like, I think this is the thing that like tech people like sometimes have you can see it on Twitter where it's like, there's like an unbelievable sense of self-importance because it's like, well, the 5 most companies in the S&P 500 are tech companies. And I'm like, yeah, like that doesn't necessarily mean that people give a shit about like our network infrastructure seed investments. And I think that's the thing, like when you're leaning on people, you kind of have to lean on people within the industry because it is like, it's niche and it's like finding people. I think if you don't talk to people who are also as in it or like as involved in it as you are, it can be, people will just be like, this is complete like gibberish and nonsense. So I try to focus on, it's like keep like your work to, have like the group of people who you can rely on to talk about work and like talk about like what you think is interesting, what you think is not, what you think is not interesting, like who are the best entrepreneurs you've met recently, but then like kind of separate that from, general life. Because the one thing I was told, like, VC is one of those professions that like becomes a part of like, it becomes like part of your personality where it's like, oh yeah, they're a VC or like, oh yeah, they're a lawyer or oh yeah, they're an investment banker. And I think like you want to be able to have that network of people you can lean on for work stuff without kind of making it all consuming and have like every social conversation and interaction you have being about like, what do you think about quantum computing?
Yeah, I know what you mean. I got a good friend that the industry that he's in, I am working with startups that are going to completely revolutionize that industry, right? He doesn't even want to hear about it. He just doesn't care. He likes doing business with people. He doesn't care about the tech side of things or the, things like transformation. And so, what we talk about? Sushi. Right? Yeah. Just bring it back to sushi and beer, man. So, there are things I could bounce off him, but it's just like, let's not even bother. So I lean on him for other things. Right. Finn, look at your LinkedIn profile. I learned a bunch of stuff that I didn't know about you. And I'm not even sure if you know that some of that stuff is all out there, and I'm not going to go through it, but tell us, just to wrap up, what's one thing that people wouldn't expect to know about Finn Murphy?
What would they not expect to know about? It's retrospectively, it's you'd look at my LinkedIn, you'd be like, oh, this is like a kind of like obvious path for fit. This is like, obviously he was like wanted to get into startups and like wanted to do this and, wanted to be a VC or be a founder or whatever. And like in reality, like I had very little interest in like, obviously like I like used my computer a lot, did a little bit of coding, played a ton of Xbox, but like I wasn't like interested in tech until like two things. I kind of like watched The Social Network and I was like, oh, Mark Zuckerberg's a billionaire, Facebook's cool, I'll do that. And then I was on a pub crawl working for Web Summit. Like I was organizing like €10 in on the door student nightclub nights. Like this was not like tech, the height of entrepreneurship. I basically like you were going out so often that you basically be like, well, I need to take up a hobby. So you'd like fluctuate between drinking and smoking and like standing on the door. And, then I was doing that one night with a bunch of VCs and CEOs. And like, I was just talking to them all and I was like, you people are all really normal. And apparently you're all billionaires. So like, obviously this isn't that hard. So like, which like retrospectively, like now that I'm in it, so I'm like, okay, that I was probably wrong there. But like, yeah, I think that was the thing. Like, I wasn't that, like, it was external factors that like retrospectively seemed kind of silly and obvious that like steered me towards making a series of small decisions that got me to where I am. And I think that's something that, like, for very little push either way, I could be doing something completely different. Like, I could be a guy sitting on like I wanted to, there was a point in time when I wanted to be like a ocean sailor. There was a point in time when I wanted to be a BCG consultant. This point in time, I think when I was like 2, I wanted to be a tractor. And like, this is but I think the thing that I found is, like, over time, you make all these small decisions, and like once they start, it's like once they start layering in and compounding on each other, it really does start to pay a dividend. So I think that'd be the thing. Like, up until I was 21, I probably had no interest in doing a startup or like I didn't even have really that much of an interest in starting a business.
Yeah, no, I hear you. I mean, I myself went from cop to FBI agent to architect to astronaut to baseball player to stockbroker and wherever the heck I've ended up these days, right? So I think at some point you just kind of, like we were saying at the beginning, that intrinsic persona of you leads you down a certain path in your life, and you find that right mix of personal and professional that makes sense. But listen, it's been a pleasure talking to you about this, Finn. Really interesting to get to know you after covering one of your blog posts on an episode. So thank you so much for coming on to the show. And once this is all over, let's try to find some time to grab that elusive pint.
Yeah. Hopefully it won't be too long away. Thanks so much for having me on the show, Pete. I really appreciate it.
Great. Thanks, Finn.
Never sleeps, pal.
That does it for this week, folks, and thanks to Finn for opening up his mind to help us figure out why he does what he does. Links and show notes for this episode are on moneyneversleeps.ie, so check us out online. Remember, if you or a colleague need help attracting or retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with a team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com. Also, thanks to Conan Brophy from Create Sound for editing this podcast. As for me, I increase the odds of startup success. Get in touch through the contact page on norioventures.com. You can check out what Owen Fitzgerald is up to these days on Twitter at OwenFitzgerald9. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.